On the call this morning, the Fed reduces growth and employment outlook for the U.S. economy, causing a global sell-off. Crude oil is down almost 2% on demand worries, while copper drops by 1% on the Fed's declining outlook. U.S. futures are negative before the open. Can home sales data, initial jobless claims, and positive sales guidance from Bed Bath & Beyond rally these markets? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, happy Thursday. Want to get to the markets. We have stocks deteriorating during Ben Bernanke's press conference on Wednesday. The big takeaway for me, I have to say, was that the Fed's going to be flexible, but not going to do anything right now. What did that mean for stocks? Why was that so negative in your opinion?
Well, he reminded everyone how bad the economy is, or how we're not progressing at a fast rate. So people just said, why am I going to be in stocks, or why am I putting risk on? That maybe 7% isn't enough. And I sort of expected somewhat of a correction or a little bit of a pullback off of that move we saw earlier in the week. But we talked about our retracement rules to see whether or not that move on Monday, Tuesday was valid. And at this point, it's almost void. So today's open. We have to watch key levels. This can negate a lot of that constructive action.
Right. So is it sort of a pullback or a correction, I guess, is the question at this point?
At this point, I would say more of a pullback, and we could continue the correction. So if we don't hold today and we, let's just say, open up 7, 8 handles down and we close down 15, we're going to be back at those lows, and we could potentially break those later this summer as we have more of these economic obstacles that keep just showing their ugly faces.
What did you make of the fact that he acknowledged that, inflation and the high unemployment issue and the Japan supply issues might not be as temporary as we thought? That, to me, also kind of left that QE3 door open. What did you make of that?
Well, I think everyone keeps giving him a hard time about transient. If anything's soft, it's transient, and transient has turned into like a funny word that people make fun of. So I think he let that it might not be transient, it might be a little bit longer. And even though he opened the door for QE3, it's going to be met with such resistance that there's no way they could pass that unless the stock market's down 10 to 15%, not just 7% off the highs.
And we're not there yet. Okay, so let's get to the chart real quick. I just want to see that level that you're going to be watching to measure the pullback.
Okay, I'm going to put up the spiders instead of the S&P, because a lot of traders are using that right now and using it as a vehicle. So if you go here to the spiders, if you remember, this was the move off the low, off the 200-day moving average. Came up into the easy resistance, right? We talked about the easy oversold bounce, and then look how we failed yesterday, giving back more than half of Tuesday's gains. And now we're coming into earlier in the week gains. So these spiders are opening right around, just say, 127.50. If this area doesn't hold today, I think that this little rally is going to come under more jeopardy, and we could break or at least retest the level that we didn't hit, which was that Japanese crisis low. So today I feel is very important.
I just want to point out, too, that we got HSBC's industrial activity reading for China, which was lower in June, about 50.1. It was 51.6 back in May, which I think could also be helping accelerate a decline today. So then what would be your strategy with this sort of backdrop and with these levels today?
Well, yesterday I sold a lot of my longs. I tried to play the bounce, so I'm coming in flat, and I'm looking to buy. But before the show, I bought a little bit of the spiders, and I'm going to see any of the key stocks, see if they could hold those key retracement levels. And if I see some stocks turn green and I see some leadership, I'll try and dip my foot back in the market, because that's what we have to do. We're going to be in this range potentially the entire summer until we get through all these obstacles and headlines. So you don't need to chase strength. You need to buy them right, take your trade, not expect much, and we will get into a better environment, but it just might not be tomorrow.